You know that feeling when your tax refund hits your bank account and you feel like you just won something. That rush, that relief, that I'm finally getting my money back feeling that makes you want to go out and celebrate. Maybe you've already got plans for it, a vacation, a new TV, finally paying off that credit card. Maybe you're even feeling responsible about it, proud of yourself for getting a refund instead of owing money. Here's what nobody is going to tell you at your celebration dinner. That refund you're so excited about. It's one of the quietest financial mistakes you make every single year, and the government is counting on you never figuring that out. A tax refund is not a bonus. It is not a gift. It is not the government being generous. A tax refund is your own money that you overpaid throughout the year, sitting in the government's account, earning zero interest. Completely inaccessible to you, being handed back after they held it for up to 12 months. Read that again. You gave the government an interest-free loan for an entire year, and you celebrated when they paid you back. Think about what that actually means. The average tax refund in America is around $3,000. That's $3,000 that left your paycheck every single month in small chunks throughout the year. $250 a month that you never saw, never touched, never had the chance to use. And while the government held that $3,000, they paid you exactly nothing for the privilege. No interest, no return. No thank you note. Just your money sitting there doing absolutely nothing while you scraped through the year wondering why your paycheck never felt like enough. Now here is where it gets really uncomfortable, because I want you to think about what $250 a month could have done for you if you had actually kept it. Let's say you took that $250 every month and put it into a basic index fund earning 8% annually. Nothing fancy, no special investments, no financial genius required. Just a simple, boring index fund that tracks the market. In 1 year, that's not $3,000. That's $3,000 plus the returns it generated while it was invested. Small difference in year 1, we're talking maybe $130 in gains. Not life-changing, but that's not the point. The point is what happens when you zoom out. Over 5 years, that $250 a month becomes over $18,000. Over 10 years, it becomes over $45,000. Over 20 years, if you just kept redirecting that refund money every single month instead of giving it to the government, you'd be sitting on over $145,000. $145,000, built entirely from money you were already earning, money that was already leaving your paycheck. The only difference is who held it, you or the government. That is the real cost of your tax refund, not $3,000, not some small inconvenience. A six-figure wealth gap built slowly and invisibly over the course of your working life. And here's the part that should make you genuinely angry. The system is designed this way on purpose. The IRS doesn't accidentally withhold too much from your paycheck. The default withholding settings on your W-4 are structured to overcollect from the average worker. Why? Because refunds feel good. Refunds make people happy. Refunds make people feel like the system worked in their favor. A population that celebrates getting their own money back is a population that never questions why it was taken in the first place. If the system worked the other direction, if everyone owed money at tax time instead of receiving refunds, there would be outrage. People would be furious. They'd be calling their representatives, demanding reform, questioning everything. But because it's framed as a refund instead of a repayment, most people smile, say thank you, and go shopping. Now let's talk about something that makes this even worse. Because the refund problem isn't just about the money you lose to opportunity cost. It's about what the refund does to your financial behavior for the rest of the year. When you get a $3,000 refund in February or March, what actually happens to that money? Studies show that the majority of tax refund money is spent within 30 days of receipt. 30 days, gone. On things people wouldn't have bought if the money had arrived $250 at a time in their paycheck. This is called a windfall effect. When money arrives in a large lump sum, our brains treat it differently than money that arrives gradually. We feel richer than we actually are. We make bigger, more emotional purchases. We justify spending that we would never justify on a regular Tuesday when our paycheck hits. The government has essentially engineered a system where your own money gets returned to you in a format specifically designed to make you spend it instead of invest it. If that $3,000 had arrived as $250 extra in each of your paychecks throughout the year, most people would have absorbed it quietly, paid a bill, added it to savings. Maybe not even noticed it was there. But $3,000 arriving all at once in the middle of winter feels like a windfall. And windfall money gets spent like windfall money. So the government holds your cash for a year earning nothing, hands it back in a lump sum psychologically engineered for maximum spending. And the result is that most Americans are both poorer and have less money saved than if they had just adjusted their withholding. It's genuinely one of the most elegant wealth extraction systems ever designed, and most people will defend it until they die. Here's something else nobody talks about. The refund cycle creates a false sense of financial security that actually prevents people from building real financial habits. When you know a refund is coming every February, you start mentally counting on it. You make decisions in November and December, holiday spending, end-of-year purchases, January vacations, with the subconscious knowledge that the refund will bail you out in a few months. You are literally borrowing against your own money to fund lifestyle spending, then celebrating when the loan gets repaid. The people who break this cycle stop thinking about their refund as a safety net. They stop planning around it. They stop celebrating it. And they start treating every dollar they earn as a dollar that should be working for them immediately, not sitting in a government account waiting to be returned. That mindset shift alone is worth more than any refund you'll ever receive. Now let's talk about the argument I know some of you are already forming in your head. Because I hear this every time this topic comes up. But I can't be trusted with an extra $250 a month. If it's in my account, I'll spend it. The refund forces me to save. And look, I get it. I understand that impulse completely. Forced savings is real. Removing money from your account before you can spend it is a legitimate wealth-building strategy. If the only way you'll save is if the money never hits your checking account, then some savings is better than no savings. But here is the problem with that logic. The government is not saving that money for you. It is not in an account gathering interest on your behalf. It is not being invested or protected or grown in any way. If forced savings is your goal, there are 100 better ways to accomplish it. You could set up an automatic transfer to a high-yield savings account the day your paycheck hits. You could max out your 401k contributions so the money never reaches your checking account. You could automate an investment into an index fund every single pay period. Every single one of these options does exactly what the refund supposedly does, removes money from your spendable account before you touch it, but with one massive difference. Your money is actually working for you instead of sitting idle in a government account. The "I need the refund to force myself to save" argument is really an argument for automation. And automation works infinitely better when you're the one earning the interest instead of the IRS. So what should you actually do? Let's get practical. Step 1. Pull up your most recent tax return and figure out exactly how much you got back. That number is your starting point. That is the annual amount of your own money that you are giving away as an interest-free loan every single year. Step 2. Divide that number by 12. That is approximately how much extra you could have in your paycheck every single month if you adjusted your withholding correctly. Step 3. Go to your HR department or your employer's payroll portal and ask for a new W-4 form. This is the form that controls how much gets withheld from your paycheck. The goal is not to owe a massive amount at tax time that creates its own problems. The goal is to get as close to zero as possible, small refund or small amount owed. The closer to zero, the better you've calibrated it. Step 4. The moment that extra money starts appearing in your paycheck, automate it. Set up an automatic transfer on payday. Send it straight to a Roth IRA, a brokerage account, or a high-yield savings account. Do not let it hit your checking account and disappear into lifestyle spending. The whole point is to redirect it into something that grows. Step 5. Adjust annually. Your tax situation changes every year. New job, raise, marriage, kids, side income. All of it affects your withholding. Make checking your W-4 a yearly habit the same way you check your phone plan or your subscriptions. Small adjustments made consistently will keep you from falling back into the refund trap. That's it. 5 steps. No complicated tax strategy. No financial advisor required. Just a form, an automation, and a mindset shift. Look, I'm not here to make you feel bad about celebrating your refund. I know that money feels good when it arrives. I know it feels like a win. And after a long, hard year, you deserve to feel like something is going right. But you also deserve the truth. And the truth is that the celebration is backwards. The real win is keeping your money working for you every single month, instead of lending it to the government for free. Stop celebrating getting your own money back. Start building a system where your money never leaves in the first place. Adjust your withholding. Automate the difference. Invest it every single month. And in 10 years, when your friends are excited about their $3,000 refund, you'll be sitting on an investment account that their refund money built while they were busy celebrating. If this video changed how you think about your refund, hit that like button. It genuinely helps more people find this channel. Subscribe for more videos that cut through the financial noise. And drop a comment below. Are you team refund or are you adjusting your W-4 this week? I read every single one. I'll see you in the next one.